Welcome! In this explainer, we're going to walk through a really interesting market analysis for Bitcoin, and we'll be using a unique geometric system called market DNA. Let's get right into the documentation.
So what are we looking at today? It's a specific cycle for Bitcoin, which the model has tagged as BTC_1_1. And just so we're all on the same page, this analysis was documented on November 21st, 2025. Think of it as a snapshot in time.
Okay, so here's our game plan. We'll start with a quick cycle overview, then we'll look at the Phase 1 entry levels, dive into the risk management parameters, check out some potential target scenarios, and finally we'll wrap up with the mandatory disclaimers. Pretty straightforward.
All right, first up, the cycle overview. Let's get the lay of the land for this analysis.
So this table gives us the basics. The asset, of course, is Bitcoin. The model tells us we're currently in Phase 1, and the expected path is a pretty standard progression, from Phase 1 right through to Phase 4.
And here it is, the geometric structure for this cycle. This is really the heart of the market DNA system. You can see those key levels labeled M, P, C, and N. We'll be talking a lot more about those. And that shaded area? That's what the model calls the trapezoid, and it represents a future price and time window.
Okay, so we've got the big picture. Now let's zero in on Phase 1 and talk about the specific entry levels the model has defined.
The first key level is the primary entry. It's marked as M on that chart we just saw, and the model defines it at a very precise price, $99,908.09.
But that's not the only one. There's also a secondary entry level, labeled P. This one's an optional entry point at $74,628.16, and it's a key part of the system's risk management protocol.
So we have our entry points. Now, let's talk about how this system manages risk. This is all defined right from the get-go, here in Phase 1.
Okay, so for this example, everything is based on a hypothetical capital of $100,000. Now, one of the most important inputs is the maximum allowed drawdown, which is set at 15%. The model then pulls in some unique parameters from its own geometry, a trapezoid time duration of 112 days, and a third triangle domain of 55.4%.
So using those parameters, the model then crunches the numbers. It gives us a calculated mean entry price of $87,268. And it also projects an expected low price domain for this cycle, which comes out to $38,922.
Okay, so what does that mean for how much to trade? Well, the model takes all those risk inputs and comes up with a very specific position size. For each of the two potential trades, the calculated size is 0.15513 units of Bitcoin.
And this is a really crucial point. That number isn't just pulled out of thin air. As the documentation states, both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. It's all interconnected.
All right, we've covered the entries and the risk plan. So, where could this go? The model lays out three potential target scenarios.
Okay, so target 1 is called the Muir line or lower trapezoid at around $102,000. Target 2 is apex N, that key geometric point, which is up at about $127,000. And the final target, which represents a full exit from the cycle, is the trapezoid top at just over $139,500.
So let's look at scenario 1. Let's say we only get the primary entry at M, and the price runs all the way to target 3. The model projects an expected profit of about $6,150. That's a 6.15% return, which annualizes to a solid 20.04%. Now, what about scenario 2? This is what happens if the price drops enough to trigger both the M and the PC entries. In that case, the potential profit jumps significantly to over $14,000. That's a 14.33% return, and annualized, that's a really impressive 46.7%.
So what's the big deal here? Well, what's really interesting is how this presents a complete risk-to-reward framework before anything has even happened. The entries, the risk, the potential profit, it's all defined right here in Phase 1. It's all pre-calculated.
Okay, and before we finish up, we have to go through some mandatory disclaimers. This part is really important.
Please remember, this is not financial advice. This analysis is being shown for documentation and public verification purposes only. The model specifically prohibits using leverage above 10. You should never, ever invest essential personal funds. And if you were to follow this model, the risk management instructions must be followed to the letter.
And there you have it. That's our complete documentation of the Phase 1 setup for Bitcoin cycle BTC_1_1, all based on the market DNA geometric system. To see more documentation like this, you can head over to marketdnaedge.com. Thanks for watching.